Hello. So today we're going to talk about accounting and finances. I'll present you a tool that I built for myself originally. And as people were asking me to have access to that tool, I started selling it. You can have access to it. It's about $96 per year. It's really affordable. It's less than $1 per day, basically. And that you'll see what I can do for you. So yeah, let me run you through like the the whole spreadsheet, what it is, and what's in it for you inside of it. So you have a summary sheet where you pretty much can see overall for the entire year, um, what is your income, what are your expenses, what are the amount that you should have in your each bank account. So the bank accounts distributed income, the way it works is basically, if I go into categorization, you'll see you're able to set your incomes, like what are the names for the incomes and expenses, but then you're able to set, okay, what are the bank account that you have, like what are the saving accounts that you have, for example, and what are the amounts that should be the percentage of the amount that you're earning that should be attributed to these bank accounts. So for example, in Quebec, which is in Canada, we have two different taxes. We have a tax at 5%, another tax, a sales tax at 9.975%. So that's a total of about 15%. So that's why here, for every income that I have that has a sales tax on it, I want to make sure that I keep that 15%. So at the end of the year, when I need to pay the government that amount of money that I got as either extra or either um, um, yeah, either if it's an extra, basically I have to give it back, and then the amount of money that I have to give to the government for my personal taxes, for example. This 31.727% is the average, the worldwide average that people will pay taxes per year. So yeah, that's the way it works. So circling back to the summary sheet, so that's basically the amount of money that you should have in these accounts. So at the beginning of the year, you pretty much want to reset your accounts at zero, and so you can keep track of um, what is the amount that you should have in your bank account at a specific point in time. And then you're able to see like year to date, net revenue, year to date, monthly revenue. If you're wondering, those numbers are just dummy numbers. And then taxes. So as I said, there's two taxes that we had two taxes in Quebec. So tax one, tax two, and then depending of the amount of money that you got in taxes, like let's say that you got $100 in taxes from sales, and you paid $150 in taxes and expenses. That means that the government will give you $50 because you paid more taxes. Here, like that would be 207. But on the opposite side, if you um you know got $100 in sales taxes, but you only like, made purchases with taxes that has taxes for, let's say, $50, that means you have to give back to the government the difference of $50. So that's the way that it was working in Canada and Quebec. um Europe is different now. I'm in Europe, so there's only VAT now, so I still have to figure this part out, but that gives you an idea of like what you get with the summary. Then in the overview sheet, what you have here is really a detailed overview of the summary. The summary is pretty much for the entire year, while the overview is not just for the entire year. If you go at the end, you can see like the entire year, but it's for per month. So you're able to see per month. Okay, so in January, in February, in March, in Q1, what were the income, the expenses, how close or far are you from reaching your goal. Let's say that you're having a goal of like 2000, then that means that if you don't have any income, you only have expenses, you're even further, you're like 2297, far from your goal. And then you're able to see like your income. What were your income in January and February, like per period of time, for each categories. And you can do the same thing for expenses and for taxes. And here it's transfer. So let's say you transfer money from your business or your incorporation to your personal account. You want to make sure you keep track of that, because the amount you transfer from your business to your personal account is what you're going to be taxed for in your personal tax report at the end of the year. Well, at least that's how it was working in Canada. I'm not sure if where you're based it's working the same way, but that's how it works in Canada. And then you're able to see, okay, we're in May. That's where we're right now. And then blah blah blah, Q2, Q3 every month. Then at the end of the year, like where are you at? So that's the overview. Then the forecast works the similar way, but then the forecast is per week. So you want to have here a breakdown of how this is working on a really granular level. So you can, let me go right away in incomes so you'll see. So in incomes, you can set in the notes, like, is it a forecast, a transaction that is a forecast, or that is just incomplete, that is missing information. If it's forecast, it won't be shown in the overview. And if it's incomplete or not, anything else, everything else that is not forecast is going to be shown in the overview. If it's forecast, it's going to be shown in forecast. And in forecast, the way it works is like per week. So you're able to see like January 1 to like week 1, week 2, week 3, week 4. Then February week 1, 2, 3, 4. But that's week 5 of the year, week 6, week 7, week 8, etc. So in forecasting, you're able to basically set your starting amount of money, and then at the beginning of each quarter, and that kind of set the tone for, okay, where are you at in terms of liquidity? So you're at $50,000 in terms of liquidity, and what is your goal for that period in time, for example. So yeah, so you'll be able to see that let's say your goal for that month is 2,000. So you want to make sure that, like, for example, you want to hit your goal at some point. All right. So I'm noticing right now that there's probably some mistakes here, because I probably forgot to do some calculations here, because I made a big update lately, and I guess that I forgot to fix a few things. Yeah, I'll take care of that. But in terms of like the forecast, the way it works, same way as the overview. You're able to see, per week, what are the incomes, the expenses, where they're coming from. Is that like subscription? Is that softwares or tools? Is that advertising? Whatever it is. So yeah, that's really how the forecast works. And the reason why the forecast is important for your business is because you want to know, okay, like, what week are you going to be in the red, and what week are you going to be in the green? And what that means is you want to make sure that you keep track of that. So if you have an expense that will bring you in the red, you want to see it ahead of time. You want to see it, what week is that going to be in, and kind of see what can you do for that expense. Like, can you move around some money? Can you ask, like, clients to pay early? Can you ask providers to create a credit account for you? Like, whatever it is, at least it tells you when are you going to be in financial, quote unquote, financial crisis, so you can stay afloat in your cash flow, and you don't have any period where you're just below zero, in a sense, where you would literally not be able to pay anyone. So you want to basically be able to forecast your cash flow level. And then incomes, the way it works is really straightforward. It's really simple. You have the date, the provider, the sales, the category of the sale, what is the amount, is there any taxes, what is the percentage that is reported to the government in your taxes, what is then the amount that will be reported, subtotal reported, tax one reported, tax two reported, total reported, and then was that amount here is in your local currency. So that means, how much would that be in your, let's say, USD? Because USD, if we go back to the categorization here, USD is the second currency and euros is the third currency that is used in terms of importance. So then that's you decide, like, enter here what you want, and then you have a transaction ID. I mean, that amount here needs to be entered as, like, if, let's say, you paid $100 USD, then you want to enter here like 125, for example, and then you want to make sure you keep track of the amount that you paid and the amount that you got charged in your bank account. And then transaction ID, notes, and then the amounts reported, the amounts allocated for each bank account. Yeah, that's it for expenses. For incomes, expenses now, same thing, really same concept. I'm not gonna, go over that because the columns are the same. In transfers, you just enter the transfer, uh, the money like incorporation to personal, as I said earlier, like what is it, what is the date, what is the amount, and that's it. Goals is what is the your monthly net revenue that you want to have for yourself, like say 2,000, 2,000, 4,000, etc. And then that way you're able to just keep yourself accountable. If I circle back to the review, keep yourself accountable every month. What is the amount that you should have had, or etc. So yeah, so that is it. That is how the you know financial spreadsheet that I built works. It's really straightforward. If you have any questions, if you'd like to have access to that spreadsheet, comment below. I'll be able to give you the link to where you can access it. And yeah, if you have any questions, I'm more than happy to answer that question. If you want me to build any type of similar spreadsheet for you, but more something custom based, it's something I can do for you, just let me know, and I'm more than happy to help you out. All right, have a good day. Bye.